Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own conclusions and make your own financial decisions. Today is Wednesday, December 9th, and this is Blockhead Traders Weekly. On this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we're going to take a break from our crypto series and revisit the capital markets and equities. In this week's episode, we're going to visit some of Viper's autoplays, and we're going to take a look at a couple of potential plays that might have opened up given all the most recent market volatility. But before we hop to this week's topics, I want to give a shout out to the Discord, link in the description below. In there, you can hop in, tell us what you're trading, tell us what you'd like to see. Additionally, you'll find another link, thetagang.com/sprocket888. I post each and every one of my trades, the good, the bad, and the ugly. So follow along and might learn a thing or two. Viper, before we hop to this week's episode, I do want to mention one more thing. As you know, I did start that advent calendar of beer. And so this evening I have another German Helles that I will be participating in. And so as we talk about some of the markets, we'll see how that goes this week.
So let's flash back. How was the grumpy grumlin or whatever that was last time?
It was not bad. It was honestly, most of these beers, I'm not going to lie, they taste very similar. So I'm wondering if they just found clever cans and put the same thing in each one. There was a dark porter in one of them, and that definitely was different than the others. But a lot of them are the Helles style. So I'm not sophisticated enough to tell the difference, I fear.
Well, marketing would never do something like that.
No. So yeah, let's hop to this week's episode. I think the last time we were talking, you were considering putting some auto plays on to test your discipline and test some of the technicals that you've been evaluating.
Yeah. So the goal was to put on like 9 or 10 plays. I actually got through 3, 4, 5 of them, and then kind of got distracted down the crypto rabbit hole. But this was kind of the perfect reasoning for this, was that it opens up that mind share, that it's super disciplined, and that targets are set, profit and stop, and the things just run. I mean, ever since I opened this, there's been some extreme turbulence in the market. I've worried zero about it because I already signed up for the loss that was possible and the profits that were possible as well. So while I was down that rabbit hole, it was very nice to not feel like I needed to go check on anything and just periodically peek in and say, oh, nope, we're still running, or nope, one cashed out. Yeah, so let's jump into the first play here, which was SPCE. So on opening, the play idea is to bank on confirmation of the bottom of the swing. Profit target is set to the next SR flip level that was lost. So the green line is the profit that I'm shooting for. The blue line is where I open the position. And you can see the green line, there's a history of resistance, and then it flipped and turned support a couple times, and then we lost it. So I'm not even looking to gain it again. I just am looking to get near it, touch it, sell out, and move on. As for the exit price, I set the stop just out of reach from the bottom of the swing at the top of previous resistance. I don't want to stick around for too much of a test there. So the red line is where my stop is, and it's a little shallow. It's a little tight. But like I said, I mean, based on the history of this chart, if we really break below that, then we're really just going to be sniffing out for a new low, and I'm not interested in that price discovery. But looking at what happened, it doesn't look like that was really the case. Then anyway, so I bought in here. It came up, and then now we are falling and bouncing back up. So this one, actually, let's see what the actual price is. So my stop is 1360. So we're not there yet, but we are, we came real close. 1372 was where we fell down here. So, almost triggered, but that's also, sort of one of those testaments to keeping the stop, because I mean, we did bounce there. I mean, we might be coming back down, too early to tell. But so far, I like at least what that's showing as it relates to my choices on the stop. The next one, CCL. This one, my opening thoughts were, the play idea is to bank on confirmation of the SR flip level support. Profit target is set to the lost level that was support turned resistance. The stop is set just out of reach from the bottom of the swing at top of previous resistance. Might have been able to wait for better price. Oh, maybe this is the one I was thinking. Yeah, well, both of them. This one definitely, there is some action here in the green box that suggested I potentially could have waited to go down here. But I think one of the things that was in my head was this candle, the day's action that when I bought in was very bullish and very like it was getting a good bounce. And this isn't an uncalled for level to get a bounce. We can see previous supports and resistance at this level. So I went ahead and jumped in there. Once that was confirmed, I actually pulled in my stop from 1850 to 1950 because what we'll see is this actually did bounce right here. So down here, I bought in here, we got this big bounce up, and then we gapped up into my profit target. The cash register rang and we walked away.
Winner chicken dinner. I like it.
That was a big winner, and that one turned tail in like 6 days. So that was nice. And I was feeling pretty good about that okay, this is going to work out. So moving on to MO. MO comes along and opening, there was an earnings dip, despite good earnings. My thought is that it dipped because of the weak environment, so it sought out a level support. So I bought it in at an SR flip level, making a play on the next level to be tested. So again, blue line is where I bought in. This was an earnings drop, and maybe an early buy, like on an earnings drop. There's still some price seeking, and this is a very bearish candle. We have a very strong low here. So it was a little risky, admittedly, but at the same time, there is reason to think that maybe this candle just hadn't retracted to a wick yet, because this was clearly a big level of support. As you can see, about a month later, I got stopped out. So let's see what happened here from 1028 on CCL. So right in here is that gap. And sure enough, a better price could have been had. However, it didn't matter. And actually what we got was a rejection of this level. We tested it, we failed, and I got stopped out. We're coming back up, but now this thing is going sideways and it tripped my trigger. So I'm out, and I'm okay with that, because this is not action that is very encouraging that it's, on its way up. Like, we've lost this level. And so now, it needs to gain it, test it before it even has a chance of getting back up here. So that was a loss. But going back to the sheet, this is why you size everything. It was a loss, but it was a $20 loss, and CCL was a $74 win. So, net $50. So I'm fine with that. Then the next one is SIRI, SIRI. This is XM Sirius. So this one I really, really, really liked. I restrained myself on position sizing. So positive momentum, the chart consolidating, pennant pattern, bottom holding. I was about as bullish as you could get on a breakout here. And that was because we have this bottom support. The bottom is holding this whole time. All the while, highs are getting lower, and so we're getting this squeeze and this pinch into this zone right here. So super bullish that we were gonna if this zit was gonna pop, if you will, and all indicators again. When this happens, it's never guaranteed to pop up. I mean, you can have this same exact setup and it could pop down. It's pressure building in this can. However, since nothing's guaranteed, we go on probability, and in this case, the fundamentals of the chart here are indicating the higher probability is a pop up. Over here, sure enough, next day, kablooey. We got a pop up of 10% over the next 3 days. However, I set my profit a little high. Maybe, yeah. So on the dailies, I'm actually in some candles back here, but these were just 2 days, and I really struggled on if I should come down a little bit to this level here, which would have triggered, and I would have been on my way. Instead, I'm still in the position, obviously. Blue is buy, red is stop, green is go. And we had the pop. And my worry here is that it may be over. We're starting to get back up into a retrace, into a bullish pattern of sorts here. Depending on where this stops, I guess. We haven't lost the level down here. So we'll leave it open. We'll keep it going. But this behaved exactly as I suspected. I was just a little bullish, potentially over bullish on the profit target. So that's the kind of thing you note.
So here's something to consider, and I really don't know much about this on how this would play out, but you said something that kind of sparked in my brain that we maybe should consider the next time you see one of these nice pennant patterns with the pressure building. You mentioned you're hoping for the pop up, but it very well could have been a pop down. I'm real curious, the next time you see one of these forming, flag it, and let's take a look at the option chain, because one of the option plays that you could consider in something like this would be to buy a straddle. Okay. And the straddle would basically be buying a call option and a put option right at the money. So the idea there is you're paying the premium for both, but no matter if it pops up or down, one of those options is going to make money. So as long as it moves higher than the premium that you're going to pay for both those options, it would be an interesting thing to consider when something like this arises. I went back at the chart just while you were talking about it, and the premium doesn't look like it was particularly high at that point in time. So it might actually have been a pretty viable trade.
That's interesting. Yeah. And I mean, certainly we'll keep it in mind, and we'll definitely bring it up because this does happen a lot. You'll see pennants forming all over the place. It's a very fundamental pattern. And I have gotten bullish on one that popped down. So that's interesting to pull in the options context and kind of do what options do. Give you options.
It's where my brain always goes anytime we talk about anything.
So then my last play here is Ford Motor Company F. So strong upside swing approaching an SR level that has long been resistance. If it can close above and break the resistance, then most probable trend is set for continuation up. So this is a little bit based on obviously chart reading, but also market momentum. Ford with all the buzz around their electric F-150, and general positivity in the market on what they're doing and where they're headed, and the fact that they were basically at rock bottom, and so now they're swinging up out of it. However, as we can see on the chart, it's a little bit of an early swing up. So this is again getting in a little potentially too early, where rather than waiting for a stabilized formulation of a trend or something like that, I am jumping in a little bit early. Bought on the blue. My profit target, I identified multiples. Let's see which is the one that I stuck with. I stuck with the 2108. which is going to be the first one. So all of these I kept pretty reined in, pretty conservative on the profit targets, just because the whole idea here was just to get some small wins. And as we can see, going over to the F chart, not a lot has happened. we have just hit no man's land. But that's okay. I mean, it's better to consolidate. I mean, let's think about the realities of a big swing up like this. That there is going to be a period of consolidation before the next movement, and I'd rather it obviously consolidate sideways than come back down here and consolidate. So obviously keeping this one open, it's basically right where it was when I opened it, just hovering right in here. So we'll see where it goes. But that's the thinking behind these plays. And it's probably about time I mean, it's been a month and a half, so probably about time I seek out a few more. So maybe I'll add a few more to the docket for the next revisit here.
Yeah, just as a side note, Ford is actually one of the ones I've been watching for options plays, and the premium isn't super elevated right now. I think they're about a 35% volatility rank. But the thing that really caught my eye is just recently they reinstated their dividend. So it's been a really long time since they've actually had the dividend. That's a great sign for a company. I'm pretty bullish overall, but the premium is still pretty decent. And this is one that I would actually consider put selling at the money to try to become a shareholder at.
All right, and I do see that. I got my dividend payment during this play. I think it was 84 cents or something like that.
Yeah, so that's great. Yeah, I really like the discipline that you have there, how you laid them up. Really a big fan of the chart or journaling that you took advantage of. It's something I think very, very highly of. Capture the thoughts that you had. Your journal is actually pretty cool because you actually took a screenshot and captured your thought process, not only in words but actually in what you were visually seeing, marked out what your thinking was. And I think it's pretty valuable to kind of see now, looking back, well, how did that play out? And you can think about it with a more clear mind rather than in the heat of the moment when you're trying to think back, what was I doing? And because you're going to get emotional about the trade at that time. And the most successful traders, in my opinion, are those that can pull themselves away emotionally from that reaction. It's much easier said than done, but good on you for the charting and everything there.
Yeah, definitely. And there's no better way to be that robot than to basically hire a robot to do your selling. And then at the benefit of the chart analysis, I'm not charting that mid-session, midday when things are flying and candles are ticking up and down, and like that just subconsciously sits on your psyche. That it's just, late at night, everything's frozen. What happened? Let's look at some setups. And, it's just a good time to check out and check into stuff because there's a lot of stress factors that are no longer present.
So with all this recent market action, it has actually been quite a while since it's been an option premium seller's market. I mean, there's always opportunities and I'm always digging for them, but the recent actions since Thanksgiving is the moments that I get really excited about when volatility comes pouring in, and not just in one particular sector. It's market-wide volatility. So I actually started taking a look to see, what might be happening, what's cooking, what's up there. And one of the things that I'm really looking for is not just elevated volatility, but it's elevated volatility relative to the historic values. And so it's called like an IV rank, an IV percentile. So if a particular underlying normally carries something like, let's say, a 40% volatility, and now all of a sudden it's around a 50 to 60% volatility, its percentage of range, it's going to be on the top end of the percentage of the range. And the absolute most fun times that I love to sell premium is when you're above that 50% volatility rank, because what typically tends to happen is a reversion to the mean. And you have volatility that's inflated. It's overstated. Things in the market tend to overcorrect. On the downside, they go too low. On the upside, they go too high. And so there's constantly plays out there for this mean reversion. And premium selling is one of the ones that's just great for that because one, you get this contraction of your volatility back to a more standard level. In addition to that, as an option seller, theta or time decay is on your side. So you're going to collect your money from your time decay, and that's going to be amplified by the volatility contraction. And so I like to look for things that are very elevated. I like to play the big names. So I'm looking for the bigger market capitalization. I'm looking for the really high volumes. You're going to get a lot of underlyings that are smaller market cap or smaller names that are just kind of spiking on meme news. I tend to stay away from those. I want where the bigger money is. And so a couple of the things that are standing out right now as good plays, I'm going to rattle them off here. AMD, Etsy, NetApp, John Deere, Philips Microchips, and Kroger grocery store. And I like to kind of take a look at, the sectors. And so I don't try to pour a lot of my portfolio all in like tech or all in consumer staples. But right now, tech is getting hammered. And so of all the ones that I rattled off, AMD is actually at a 77% volatility rank, which means in the last year, only 33% of the time has it actually had a higher volatility than right now. So this one is at the top of my list for premium selling, and I'm so frustrated I actually didn't catch it earlier today because I ended up putting a trade on a future in the Russell. But Viper, I think you have a position in AMD that you're not super happy with right now, right?
Nope. Yeah, so I'm underwater. Generally long term, hold it and it goes up. So that was my plan. Of course, that's still the plan. However, it's just frustrating when you embark on that plan and then it immediately slaps you in the face. I am in up here at 155, and I mean, like I said, it wasn't my favorite entrance, but one of the major reasons it wasn't my favorite play is look at this action going up. I mean, this is a big up. This is an up of all the way up to all-time highs, a 20% gain. However, does anything about this candle pattern indicate good? But it was on my mind when I opened the position, so regretting it a little bit for sure. But I'm definitely curious what elevated volatility could offer somebody, not just on this position, but in general when you find yourselves underwater like that.
Yeah, so before we hop to the option play, just take a quick peek here at this chart of AMD. And the thing that I want to call out here is we're still in a pretty overall bullish trend of this thing. This is a daily candle yearly view, and I really like how our 200 moving day average is climbing up. You got your 50-day, your 21-day moving up. You got these nice pullbacks to the 21-day. Occasionally you pull down to the 50-day, but you kind of rally up. And then right here we got our all-time high, this 164.46. We got a pull down. We crashed through the 21-day, but the 50-day moving average has kind of offered a little bit of support. We've rallied off, and we've just recently started to pull back to this. And so at the same time, this chart down here is the implied volatility. And you can see that the current implied volatility is about 57%. But if you look historically where a lot of this has been on this really, really long bull run, the volatility has been relatively low. So that brings us to some of our options trades or options choices here. So what I've done here is I've pulled up the option chain. Now, a lot of times when I'm selling options, I like to be in the 35 to 40 to 45 day expiration, which is exactly where we are. So the third week in January, the monthly January expirations are 44 days away. I love monthly expirations. That's typically what I like to trade. So we're really in the sweet spot. And so what I've thrown in here this first jumped out as me as, I'd like to play this with some naked puts. And so if I look at the delta in here, I like to usually start around a 16 delta, maybe 20 delta But if I look at the chart and I'm really pulling down to these levels where I'm kind of expecting support, I'll kind of creep up on my delta a little bit because I'm relatively confident that we're going to hold. Now, I never really go above usually a 30 delta, but I can see I can get right here a 26 delta, which is a 125 put. And I could sell that thing for about $460, consuming only about $1,900 in buying power. And this is just an excellent ratio for me personally for the risk to reward. But Viper is in a little bit of a hole. So what I thought I'd do is maybe play out some potential plays for him. And so what I've thrown in here is I've thrown 100 shares of AMD with a cost basis of 155. So if we look at the profit chart or the profit loss chart, you can see right here, this price slice is where we are. And so this particular investment at the $0 is basically a loss right now of about $1,700 from the cost basis of 155. So what can we do about that? How can we take advantage of some of this volatility? Well, the first thing that you could do is you could sell a call. So you could do a covered call because you own 100 shares. You could sell a call contract as long as you sold your contract, not below or too far below your break even point of the stock. It doesn't cost anything to sell a covered call. And so looking at the option chain real quick, looking in the calls, I like to keep my calls a little bit closer to the money just because you get more premium. And if the stock is kind of in a bear trend or you're not thinking we're going to rally to new highs anytime soon, it's kind of nice to collect this extra premium here. And so, with a 155 cost basis, I can throw a 155 in here, So if you sell at 155, okay, that was your cost basis, but you're going to collect $4.05 of premium on that. And so what you can see is if we add that in, sure, you're capping your profit up here. So if this thing rallies, you're never going to make more than $405, but nobody gets in trouble for taking a profit. So, what can we do? Well, we could juice that up a little bit. We could slide that to, 150, which is a little bit below our cost basis, but we're collecting $5.35. So if you're not thinking that AMD is going to the moon anytime soon, you're not really going to lose any money by selling this call, because if you add that in, that would be like selling your shares at 155.35. But like I said, we're playing the volatility contraction here. And so if you look at the chart and you think, I think this is AMD is going to find a level here. And I think it's going to either kind of go sideways or maybe up a little bit, but it doesn't have a lot of bullish momentum, something like that, right? We might want to throw in a short put. Okay. Now you're going to spend a little money in buying power to do this short put because it's not covered. It's naked, but you're going to be able to collect some premium on that. And now you're collecting, $9.90, almost $1,000 in premium by selling a covered call at 150 and a short put at 125. Now remember that 125, that's a 25 delta, which means there's a 25% chance you're going to get to that part. And so if we look at this, setting this up at a 150, 125, now all of a sudden break even on those 100 shares is sitting at 145, right? Remember, is 155 cost basis. So before that, your break even is all the way up at $155. Throw both of these things in here, and now you got a 145 break even. So I don't know how that fits into your price action there on your chart or where you think your ceiling is, but AMD is in a little bit of a downward trend here. I don't know how bullish you are and how quickly. Remember, with option selling, it's how quickly are you going to get to that 150 level? Or if you think you might get there, bump that up to a 155 level. Because remember, that coupon is going to be no good after that third week in January. So if it doesn't close above that third week in January, you keep your shares and your premium.
Yeah, it's interesting. So if we check real quick, going to the price action, we can see, so clearing out some of the other stuff that I had charted, our strongest level that we have here on this rise up, I believe our strongest level is right here, 119, 120. And we kind of have this 136 to 138 where it's at right now, which is so far proven itself to be a support. Obviously, we ran up, we came back, we ran again, we came back, and we're testing it right now. So whether or not it holds is critical as to where we go from here. But there definitely seems to be downside risk to 120. Maybe stop at 125. But one thing in our favor of the volatility crush is the fact that we have already hit this. We came back up, we're coming back down, and this bit of movement here is far less volatile than this bit of movement here. And really, maybe it does come back to 120, but it doesn't appear that it's going to be doing it in as volatile of a way as it flew off of the all-time high, which makes sense just in a price action realm.
Yeah, and that's why when you get into these plays with such high volatility ranks, playing that volatility crush is oh so powerful. Because remember, when you're selling options, the strategy that I employ is not to take this thing to expiration. You just wait for yourself to get the premium that you desire out of there, and you pack your bags and you go home. And so with a volatility crush, if they're falling from a 77% volatility rank to like a 60% volatility rank, or even a 55, so much premium is just going to evaporate away out of those options. You'll be able to buy them back for cheaper, pocket the couple $100 that you get to keep, and sell again, reestablish a position, wait for your move. But playing that volatility crush is definitely a very profitable approach. So AMD was my first ranked volatility crush that I came across with 77% IV rank. In second place was Etsy, ETSY. So if we take a look at Etsy here, you can see massive decline here from its all-time high of 307.75. We're trading down all the way in 234 right now. We dipped all the way down to 220. If we zoom out on the macro scale, you can see we're still on this upward 200-day moving trend. This is a pretty big pullback. This is not uncommon, or it's not abnormal for Etsy to drop down to its 200-day moving average before kind of going sideways for a bit and then continuing a rally. So right here, we've got a huge drop, super extended from the 21-day moving average. Didn't quite make it back down to the 200-day moving average, but it did kind of bounce a little bit. And look at the volatility here. You can see that precipitous drop from that all-time high. Now, you get kind of a volatility as you kind of really push anything into all-time highs. Your volatility always ramps up. But right here, we're at, if you look historically back, just pretty high up there as far as the IV rank. And so this is another one where there's pretty decent premium selling to be had. And if we take a look here at the option chain, we go to my favorite 43 days out here, that third week in January. You can kind of come down here and you can see that for that 16 delta, which is the 195, maybe a 20 delta, probably where I'd kind of land a little bit conservatively with these tech stocks in this market. A lot of talk about inflation, a lot of pullback from the growth stocks. I want to be a little bit cautious of that downside risk. And so I might not go all the way up to that 25 delta or that 30 delta. Just taking a look here at the 20 delta, which is, $200 strike price, still pulling in, $560 as a mid price, or sorry, $540 as a mid price, with about $2,500 in buying power reduction. So again, like I said, this is really, really thick premiums. This is that volatility crush. So when I'm looking at my screening plays here, I'm really looking for that high elevated IV rank for the play. So one last kind of tech play, and this is actually third on my list of things to consider as I was looking at the IV rank. So this one was in third place, is NetApp, NTAP. So NetApp is interesting one because if I take a look at their long-term chart, I can see that kind of been going sideways here for quite a while. All-time high is about 94.69. Not a lot of up or down. But if you look at the volatility in NetApp has really kind of been increasing since late October. And it's starting to fall off in the past couple of days, but it's still pretty elevated. So it's about at a 57% IV rank, which is pretty good as far as IV rank goes on a lot of underlyings. It's tech stocks, so be a little bit careful when it comes to that. But you can see for as much pullback as there's been in a lot of tech names lately, look how little this thing really moved. The NASDAQ lost a ton of value. And a ton of tech stocks were dropping 10%, 12%. And this thing's really kind of staying stable up here. So I really like that, but we've kind of increased in the volatility. So we're still getting pretty decent premiums. So if I take a look at the option chain here for NetApp and I come down, I can get in a, $80 16 delta. I could go up to maybe a $30 85 delta. And you can see that I'm going to collect about $1.85 on a cost basis of $1,500. Now, this is kind of on the lower end of what I like to see, but it's completely doable. And you could size this thing out to fit your position size. But the premium in a lot of these stocks are really driven up right now. And I just want to call that out. Take a look at it. There's some great selling opportunities out there. Well, Viper, that brings us to the end of this week's episode. As you can see, a lot of action in the market. I'm pretty excited about it. This is the time of the year that I really like, when the volatility is really rising. There's a lot of options out there. I have a hard time picking what I'm going to enter, but it's just an exciting time. Yeah, bull runs, everybody loves those because they're cool, but when it comes to premium selling, it's not that exciting. Volatility is usually kind of declining. You don't have a lot of opportunities. Really like the auto plays that you laid out there. Really having a great time. Actually hoping to get back to some of that crypto series that we've been started a couple weeks ago and kind of trickling in there. Gotten a lot of my creative thoughts flowing, and I've really started kind of digging into different aspects of crypto. The DeFi area has really intrigued me. Very interested in that. Also really interested in liquidity pools. And so I've been doing quite a bit of research on my own there. We're going to start an area in our Discord kind of focused on that. And I'm a noob when it comes to crypto. And I'm just going to start kind of posting my stream of consciousness in there and the thought process and stuff that I'm seeing. Crazy thoughts that, I actually want to become an Ethereum staker. So I got to come up with a few
You're not touching
Ethereum coins.
You're not touching Bitcoin though. That's the real important takeaway.
Yeah, I thought about it, but there's just so many painful memories there.
Yeah.
So yeah, looking to get back into that discussion a little bit more. I think we're gonna throw in a couple more bits into that series in the areas that I'm interested in, because I think it'll be an interesting perspective to get a total beginner's diving in look at some of that. Viper, you got anything coming up?
I expect the next. So I gave it some thought. Obviously, we laid out four-part series in the crypto series, and I think it still will be 4 based on some conversations Sprocket and I had. But we'll do a quick change where the third one, the next one, we're going to get straight into now the real nuts and bolts of investing and trading and all those things you just said. And then I think the fourth one will become more of that wrap up from the bird's eye view for someone just getting in, the beginner's view and all that kind of stuff. So real excited about where we're headed next on that.
Absolutely. Looking forward to that. So good luck out there, guys. Remember, hop in the Discord. Let us know what you're trading. Let us know what you want to hear about. Good luck. Have a great week. And remember, think outside the block.